Alright, so we're going to jump right into it. We're going to be picking a random pair, and we'll be continuing with another back test. So, number between 1 and 20. Looks like it's 13, so go here to the pairs. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Right? That was 13, yeah. So it's CAD CHF is the pair that we've got. I'm going to go to a different chart here, CAD CHF on FXCM. And we're going to scroll back to the count of 3. Okay, well, need to make this worth it, so I'm going to zoom way out. 1, 2, 3. Alright, and we are in June of 2019. So we're in a pretty steady state market in 2019. 2019, there wasn't really anything too crazy happening. There was like Brexit here and there, but nothing too wild. So as you see, I'm only marking up the zones that are super clear, super obvious. No overthinking, no having to zoom in all the way to the 1 minute chart, try to figure out where the actual zone is. Just the simple clear zones, and then just waiting for those zones to be reached. We'll start with, let's do 500 this time. We've done 1,000 the past few times. Let's do 500, and we'll see where this back testing goes. Just gonna let it play out till it gets to one of these zones. Alright, so it looks like we did have a trade. We came up into the resistance zone. We rejected the zone, so our entry would have gone right there. Stop loss goes right above the zone. In this zone, I've received a number of you all emailing me, letting me know that the last video in which you did not modify the position at all, you guys wanted to see more of that. So pretty much just the system without the active trade management rule. And so we're going to be going over that. We also have, I did a one-on-one session with one of our clients today who, he's been profitable doing this. He's made back his money that he used to purchase this program with. And what he was running into was issues in selecting zones. So what we worked on with him was selecting zones where price is very likely to bounce at. And then also another thing was that essentially what it is he doesn't have a lot of time. He's a very busy man. He works during the day. And so he doesn't have a lot of time to be able to check the charts, modify positions, close early, do this and that. So he said that he enjoyed the approach more of just being able to set and forget. So that's actually increased his profitability. And so it wasn't just him. It was a couple people. It was maybe not a lot. It was 4 people who emailed me just today alone, asking if they could see another backtesting session on same system, but just without modifying the stop loss. So in this case, like, you don't need to put a stop loss far beyond the zone. You don't need to worry about closing early. It's essentially you put the trade on and it either hits the stop loss or the profit target. So there's no trade management at all. So we'll do that here for this video again, since that's been requested a lot. So this one failed. It continued above the resistance zone. This represents a 40% loss to the capital, meaning we're left with $300 in the account. So we'll go here and we will continue back testing. Let me make sure I'm drawing up all these zones here. It looks like the next clear zone was this right here. So it looks like we did have a trade right here. Price came to this zone, it bounced. I apologize for it running off too quickly. It's just it would take so long going candle by candle to wait for the next zones. We'll take all the logical trades that happen. So price came to the zone, touched the zone, then rejected. It looks like around where these highs are is where the main zone is at. I would still keep my zone kind of extended further, just in case there's a big market spike below this zone. The stop needs to be below the zone, and the profit target will be at a 1 to 1.25, so right about here. So it looks like that would have been hit. So yeah, this would have been fine. The stop loss would have been fine. Entry confirmation came into the zone, hit the zone, rejected with a bullish pin bar. Yeah, everything lines up with that. So this will be a 1.5 times winner, so a 50% winner. So we're back to like 450, and we'll see which setups occur next. Trying to make sure, there we go. Okay. So we've gotten up here, the highs of this zone are right in here. So we've got to this zone. That first candle, that's a straight bull candle going up into the zone. This candle, there's not enough evidence there, in my opinion, to say that price is rejecting this zone. However, this bearish candle closure right there is enough evidence to show that, hey, this trade will be worth a shot to take. So let's extend the zone a little bit further up to encapsulate that wick high right there, since it pinned a little bit past the previous high. And then at the same time we're adjusting the zone, we'll be entering right here, be putting our stop loss just above the zone. This is a fairly good entry since it's right there in the zone, so we don't need to have our stop loss very high since we won't be modifying this trade at all. Stop loss just above the zone, and we're looking for that little pull away from the zone, just that little bit of a bounce at the resistance to hit the profit target. So in this case, it would have almost hit the stop, almost hit the target, and then would have gone up and hit the stop before then coming back down. So one thing that I covered with our client as well on the call today is this will happen. Like I was telling him, it's more likely that that's going to happen a couple times where you take a loss, but then if it closes bearish, then you can just re-enter the trade. It is kind of frustrating that that happens. However, it's not something you can avoid unless you have the wide stop losses and you have the trade management rules in place, or just the one trade management rule. So in that case, the trade management rule would have been if we closed above the zone, in which case you still would have exited anyway, except your stop would have maybe been somewhere way up here, so you would have only taken a 20% loss. In this case, it's the full 50% or the full 40% loss. So we'll do times 0.6, it's 270. Not off to the greatest start. However, what you can do is, as long as it closes with bearish rejection, after you've been stopped out, if that same candle does that, you can simply re-enter the trade, just distance your stop loss a little bit more above the zone, obviously, and above the previous high. So now we'd have a profit target of 1 to 1.25 representing this target right here. And if this one doesn't work out, then it would be best to not try to take the trade again. So in this case, it didn't work out. So this will be another 40% loss. So now we've lost a good chunk of the account. So we'll have to see if we get a win streak. If not, we'll go ahead and just call this one failed. And then we'll move on to the next. I don't see any zones that are too clear up here. We do have some wicks being respected right here. And we have liquidity spikes here and here past the zone, but it does look like this is the zone that price is respecting the most. So we'll wait to see what we get right here. It also looks like this zone right here is the one that's being respected a little bit more. Problem is, it's a really wide area. We'll see if something interesting happens right there. So we do have price hitting the zone. We've extended the area to encapsulate the previous lows. This isn't the clearest zone because we've had this crazy spike happen right here. Then we had a test and a bounce. Test and a bounce here, break above, test the support, and then bounce. So, but again, as long as it's wide enough and you can have enough room to distance your stop loss, if price is still showing that it's respecting the zone multiple times, and it's still fine. So in this case, it hit the zone, it bounced up, closed with a bullish rejection wick. This would be a trade that's fine to take. Stop loss would need to go below the zone. In fact, probably a little bit lower, just in case it had a little wick past it. Stop loss at sorry, targeted a 1 to 1.25, and this one would have gone up and hit the profit target. So that's good. Looks like it came back and even retested the zone a second time. So 1.5 back to 243. We'll see where this account goes. This trade, this is open for interpretation if this would have been another trade that you could have taken. Generally, I won't take second trades where it's like just barely bouncing and doing this. This one had a nice run up and then it came all the way back and then had more rejection. Problem is on that rejection, your entry would have had to have been up here, and that entry is pretty far away from the zone. So in any case, I wouldn't have taken that one. So now we have another return to the zone. We have bullish rejection, which the first candle that rejected the zone was right there on that 1 hour bullish candle. So in this case, the entry would have been there. Stop loss right here at the same location is fine. And a target right up here. So again, there's no trade management rules. All you do is hold on to the trade regardless. We did have a push deeper into the zone, then rejection. But in this case, this one didn't break the zone. So it's just a set and forget. Hit the profit target. So that's good. So 243 times 1.5 puts us at 364. And we'll keep on trading. Now that we have more respect down here as support, I think what would be logical to do is to drag the zone a little bit further down here. Looks like this is the zone that's being respected more. It looks like that right there must have just been liquidity spike past the zone, but we're finding support here once and twice. Had a break, whipped through the zone, tested twice and rejected, but then it whipped above and came back. You just have to adjust the zones as you go based on where price is respecting. So in this case, we have another rejection of this zone. It's come, it's rejected the zone. It's pushed up in a bullish candle. You can enter there with a stop loss just below. Targeted a 1 to 1.25. So this one, that one would likely have taken the trade out there with spread. So we'll call this one a stop out from there. We'll also be able to look for a buy. I'm sorry, a sell. So times 0.6. If this account gets below, I'll say 100. We'll just call it a blown account or a failed account, whatever. So we've come up here. We've rejected the zone. Candle closed right there. We need our stop loss to be above the zone and our profit target of 1 to 1.25. In this case, it's kind of nice because it's right there at the previous low, meaning we don't even have to make a lower low for it to work. So we'll see what happens here. So in this, it hit the previous low and then also made a lower low. So it was a simple break and retest trade that worked out. So 218, we'll make about $100 on this. So 300, and then we'll continue. Let's extend our support level here. It looks like we just had straight bear candles all the way through this zone. We never saw any type of clear support being formed. This could be bouncing as support. It's not very big bullish candles. Let's see if we get some better evidence that price is going to be reacting right here. Actually, technically, yeah, there's no need to overthink it. It's coming to where the main support resistance zone is previous resistance, now potentially support. It's bounced, so technically right here, I mean, if we're not overthinking it and just taking all the trades that come along, that right there would be a good entry. On the first, it's a bull candle up. A stop loss just below the zone. We'll give it a little bit of room in case it has a little bit of a pin lower, but it doesn't really need to be any lower than the lowest portion of the zone. And a take profit at a 1 to 1.25. So in this case, it had the little bounce at the zone and hit the profit target either there, or if spread didn't close it there, then further up would have. So we times 1.5, we're back at pretty much the starting balance. So we'll see if we can still hit the 5K target from here. So this is good. We've had a liquidity spike a little bit below the zone. Let's go ahead and adjust this zone to be down here. I know that we have wicks pinning past this as resistance. We can readjust it in the future if we need to use it as resistance. But for right now, for whatever reason, it looks like price is respecting the deepest portion of the zone. So all we've done is our zone was up here. We've just said, all right, based on what's happening, let's just drag it down here just to be safe. This will allow us to get, if it comes and retests and bounces, a better entry, a tighter stop loss, and an easier target to hit. So we do have a trade right here. We've come into the resistance zone. We've rejected the resistance zone. Stop loss just above, target down here. An immediate move into profit, which almost hit the target, but barely missed it. So it looks like that one did hit the target there. These ones are, so these are all locations where it's like, depending on where you put your stop will kind of play out the little different scenario. If you had your stop right above the wick, that's not something I recommend. I recommend you distance it just a little bit. It gives you still a tight stop loss just above the zone in the previous wick, and your profit target's still easy to hit, and you're less likely to take a stop out, because keep in mind, sometimes price will come back and test the previous wick, or it will fish just barely past it to take out any stop orders that are sitting right above the wick. You don't want your stop loss just above the previous like extreme wick of the resistance. You want to have it a little bit distance past it. Again, it doesn't need to be way up here unless you're doing active trade management. Then right there, you would have just closed your trade, and that would be like a 20% loss instead of a 40% loss. But in this case, it's perfectly fine to just have it like just above like the wick with a little bit of room in case it does something like that. So in this case, this one, it took a while to play out. It took July 25th to July 30th, so it took like a couple days, trading days to play out, but it did end up playing out, so that's good. So this is good. The account's growing. We were down to like, I think below 200 bucks at one point. Now we're at 700. It's good because we got a little bit of a winning streak, so the winning streak helped recover the account. So we could be setting up for another sell. Right here, we need some evidence that we're actually rejecting this zone. So that's some good evidence we're rejecting right there. These bearish rejection candles weren't really big enough right there. So it looks like we're rejecting right there as a resistance. Let's also extend our zone further up here, since these past three little spikes down have extended up here, here, and here. Let's extend our zone a little bit to be able to give it some room. We can give it some room to breathe with having a stop loss up in that location, and the take profit is still relatively easy to hit if it has a little bit of a sell-off. So in this case, it didn't have a sell-off here at the zone. Went halfway to the profit target, then went up and hit the stop loss barely. That candle did close bearish though. The problem is with that candle is it would have closed right there, which that's technically still fine. That was where the previous entry was. Let's go ahead and let's log this loss right here. 0.6, so 442, and then we'll enter another sell right here with the stop loss just above that high. Target has to be a little bit further, but if we're going to be rejecting this zone, then we should see it hit. So this one, it goes into drawdown, touches the top of the zone, comes down, comes back up, and then finally goes and hits the profit target. Taking the second entry will not always work. We took a second entry over here and that did not work and ended up stopping out the second time. But it's worth taking a shot on the second entry if you get stopped out, but it just closes with a huge bearish wick at the resistance. It's still fine from my testing to still take an entry, meaning you don't know if it's going to win, obviously, but it's what I'm saying is that it's still worth a shot if you stop out, but there's been like a strong rejection wick. So we've come into support, we've had a bounce. There's a little bit of a wick closure here on the 1 hour. That's not the greatest sign. The next candle could be a down bar, but it's still a trade worth taking. We just need to make sure that we're drawing our zone to where it's respecting now. So what I've done is I've drawn a little bit lower where that little bounce and this bounce was. We had a deep push into the zone there. So we need to have our zone extending all the way to the wick, and then our stop loss needs to be past that. So this would be a good stop loss area. And the target area is the same thing as always. So we tested the lower portion of the zone, bounced up back to the entry, and then hit the stop loss. So we're not really running into a winning streak here with CAD CHF during this time period. We've kind of been floating around the starting account balance. And this has been from the 28th of June to the 1st of August. So it's already been over a month. And on this pair, we've only had, it was a 3 trade winning streak. So, you know, that'll happen obviously sometimes, as you guys know. All you have to do is you just keep trading through it. I've already told you guys many times, you're going to have winning streaks, losing streaks. There's no way that you can predict where your winners will be, where your losses will be. The idea is just to keep trading through it all. And if you have a bad week, don't chalk it up to yourself not knowing how to trade. Just chalk it up to the market just not respecting zones. Don't try to figure out like why it happened, or like why was the market not respecting zones. Should I change something? Just keep in mind, every single thing works, and also every single thing that works will have moments in your trading where it doesn't work. And then it's fine, like it's just trading. That's the uncertainty of trading. It's perfectly fine. There's no reason to freak out about it or anything. This is a pretty clearly defined zone. So from right here, these lows, let's extend this to the previous wick right there. So it's coming to the zone, it's bounced, had a little bit of rejection. So stop loss goes just below the zone, a little bit further, and take profit goes right there at that area. So we'll see if we have a nice little bounce off this zone. So we did have a continuation from the bounce. It was just a simple buy at support. That's why I like the clear zones, because the clear zones are the ones that are generally most respected. When you zoom out on the 1 hour, which is how I recommend you draw your zones, just zoom out on the 1 hour. It gets you to kind of see the big picture. Otherwise, if you're zoomed in like this deep right here, and you just have like the last day or two of data, you're going to be drawing that zone there. You're going to be drawing this zone here. Going to be drawing this zone here. And your chart is just going to get cluttered with tons of zones. And so it's best to not do that. You know, it's best in the grand scheme of things, when you zoom out and look, these little support resistance zones, while they still are technically support resistance zones, there haven't been big moves off of them. I mean, from this bounce up to here, that was 20 pips, right? From here to here. The last time we were at this support zone, though, we had a move that extended 250 pips. And so you want to just use the zones where there's the clear bounces. Like this one, we had a bounce down 120 pips. Same thing here, 125 pips. Again, 125 pips. Broke above, had a bounce of support up here for 70 pips. You want to be using those major zones. So don't get too confused and bogged down with this right here. I understand that in your trading, you want to be able to take a lot of winners. I'll go ahead and add this one in. You want to be able to take a lot of trades. You don't want to miss something. You want to feel like you're working hard. You want to feel like you're making progress. And so you end up doing all of this unnecessary stuff. The key is just to go to the chart, draw the, like scroll out to the 1 hour, draw the main zones based on where price is close to. Like, so you don't need to go like, you know, way up here and draw like that zone way up there, right? If price is down here, just draw the zones close to where price is at. if it gets to be anything weird, if it gets to be something like this right here, where you're having to like figure out, okay, well, it recently rejected right there. So is it that? Well, no, because it's like respected further up here. So maybe it's this right here. And you're like, and that was resistance, but we've had a couple pins past it. If it takes you longer than 10 seconds to decide if it's a zone, it's probably not something you should be trading. The clearest zones will be the zones like the one we just took the trade off of, where you're like, yeah, we've bounced there, there, and there as support. So you just put the zone in. You don't have to question yourself like, oh, is it going to work? Is it a clear zone? Has it been clearly respected? You don't have to mess with any of it. All you do is you just have to put it there and then wait for price to get there. So you can set your alert like halfway in the zone, and then when your alert is like something like that, then once price gets there, it'll trigger your alert. All you have to do is wait for rejection. So you check the next 1 hour candle closure. If it closes in your favor, then you've got a good trade. And if you're not using active trade management, then you don't even do anything else after that. So had a little bounce off here. We didn't really have a huge continual move up. We would need a nice move away from the zone, and then if it returns, we could take a second bounce. In this case, we had just a bounce barely to the profit target, a test back at the zone. So in this case, we would leave it alone there on that second test. It did fall through the zone, but then it pushed right back up. So it could be the case that price is now respecting this area. So we'll keep that in mind if we come back here for a second test. It'll be fine to take a retest if it comes back, because we've had a liquidity spike below the zone. So after the liquidity spike, the fake out, if it comes back above the zone, that means it's a fresh break and you'd be waiting on a retest. Yeah, so what I'm going to do is I'm going to go ahead and extend this zone further down. So it looks like we're only going to be able to use this data right there. This looks like it's not going to be respected. So it looks like we should just leave this one alone. So it skimmed below the zone again, pushed back up into it, rejected, came down. So it did find resistance there. So I guess something like that's the zone. Some things like these will get harder to trade. So that's why it's best to just not do anything like what I just did. If you get your first trade off the zone, but then it starts screwing around and going sideways, it's better to just leave it alone. So I'm scrolling back, trying to find an area where price could interact with. I don't see anything clear when I look left. I only see this previous low right here. And so if we have, like the last time we were here, it bounced like whatever this was, like 1,000 pips or something. So we'll just have this here just in case we get there. If not, I mean, you know, the only zone we had was up here. It broke, it came back, retested, rejected this zone. But unfortunately, we weren't looking at that zone as resistance at that point. We were still wondering if we had got the zone right, like if it was something like that. So yeah, we'll just keep this zone here. We'll let it play out. So we've had a nice move away. We've had a second test of the zone. It's come to the zone. It's paused, it's respected it. Had a rejection candle right there, and it closed right there. So there's that rejection candle, stop loss just above the zone, and a target right here. So it went down to the target. And this will be a 1 to 1.5. So times up 1.5, sitting at around 900, and then we'll see what else happens. So keep in mind, after this hit the target, I wouldn't take these second, third retests. They would have worked out, which is the horrible part, because sometimes like they will and sometimes they don't. I don't take, again, second, third retests if we haven't had a clear move. However, we've had a clear move down here, and then another pushback to this zone, and then a strong bearish rejection of the zone. this is a trade that I would have taken. I mean, that looks like it's clearly respecting the zone. So resistance, I want my stop above that previous wick. I want to have that have a good range. I'm also going to extend my zone a little bit further up right here just to encapsulate all these previous areas. This right here looks like it's a resistance. I'll leave that alone just because when we scroll out to the 1 hour, like let's scroll way out. I mean, it looks like the zone is like something like this right here. So we've got our stop loss placed at a good area. TP at a 1 to 1.25. This looks like it's going to be channeling above the zone because now we're seeing the rest of this data. At the time we would have seen this occur, that's what we would have seen, and that looks like it's about to just continue ripping downwards. This one, it keeps kind of trickling above, so not the best price action. So yeah, this is a trade where you'd be in for quite some time. Almost hit the target there. That's really frustrating. Comes back, goes back and forth around the entry and stops out. So this is after August 13th, August 23rd. This is a 10-day trade. There might have been somewhere where you had maybe closed this at break even or just got out of it in profit or loss or something. But if we are following the rules, you would have held this trade, and for 10 days, 10 calendar days, it would have held. You would have incurred swap fees and it would have stopped out. That's just the brutal reality of trading. So now we're back to 538. If these next couple trades don't work out, I think I'll go ahead and say we've just scratched this challenge. We'll scratch this account. It's June 30th to now August 23rd. So it's June, July, August. It's 2 months, and this account is still pretty much break even, which is cool because, you know, at least you haven't lost money, but it's also not cool because you haven't made money. You've been sitting on an account for so long and haven't made money. I'm also going to adjust this right here as a new resistance zone, just because we've been coming in here pretty consistently and having bounces at that resistance. Yeah, so we'll keep on looking at that zone as resistance. We've tested here over and over. I think the next push is going to be up personally. However, we have rejected the resistance zone again, so I'm just going to take this trade and play out. Again, we're not here to overthink anything. We're not here to try to be a hero and try to get every single move right. We're just here to take trades that make sense to take. This one, we have been up here multiple times in the past, but we've had a nice move away from the zone. We've come all the way back. We've started to reject. So even though my intuition tells me this one might break above, it still makes logical sense to take. And even really, like this right here, like that move after it rejected would have made logical sense to take too. It's just I wasn't watching that when I was like here doing this back test. I was, you know, I was kind of like letting it all play out or whatever. So this one would have play out or whatever. So this one would have spiked a little bit above the zone. Stop loss was a good distance away. It ended up playing out. You see, I could have literally probably almost bet money that this would not have worked out, but it ended up working out, which is why you as a trader are better off just accepting that the market cannot be predicted. So, I mean, it sounds counterintuitive though, because you ask yourself, you're like, well then why the hell am I trading in the first place if the market can't be predicted? That makes no sense whatsoever. You have to think of trading with the mental framework of it's literally gambling. Like, what is gambling when you look at it? Gambling is placing a wager on an uncertain outcome. So in this case, you're wagering money on an uncertain outcome of whether a trade is likely to win or lose. You can use things like technical analysis and risk structures like I teach here in this course, and you can use a compounding mechanism to magnify your profits but de-magnify your losses if you have losing streaks. You can use all this shit to like figure out if you're gonna, be able to do it successfully and get a good result or not. But ultimately, you need to just lovingly embrace that the market cannot be predicted. And I want you to embrace that with the mental framework that that's okay, because all you have to do is happen to quote unquote get lucky with a win streak where all the zones you're trading off of happen to get respected perfectly. Everything just seems to bounce right where you enter. You catch a couple trade win streak, and you go from 500 to 5,000 in like a week or two. Okay, and that's going to happen at some point. But you also need to understand that in your losing streaks, and even during like this, like trades where it's just like, you're like, man, I don't know if this is going to work out. We've tested 1, 2, 3, 4, 5, 6, 7 times here. We have to be breaking out at this zone. You've got to keep it simple, and you can't let your brain pull any of that BS with you. You got to be able to catch yourself and say, well, no, when it comes down to the trading rules, it's had a nice move into the resistance zone. It's had bearish rejection. I'll enter a sell with a stop loss above the zone and a target at a 1 to 1.25, risking 40% to make 50%. That is your job as a trader of this system. It's just to execute the rules over and over. You don't need to worry about if it's going to work out or not. It's okay, because the stats always play out themselves. Whether you're right or wrong, whether you suck at trading or whether you're right most of the time, eventually you will get a losing streak, and eventually you will get a winning streak, which grows the account to the compounding target. So in this case, we're at like $800. We'll see how the rest of this goes. This one, we've had a little bit of a move away, but it wasn't a big move. It barely hit the target. Now it's come back. This could still bounce downward as a sell. It's not like we had a huge like sell off, then we've come all the way back. This is kind of like, all right, we had our little pop away from the zone, but now we're right back up. So in this case, I would leave this alone and not take a sell. So the sell would not have worked out. So that's why it's a good rule to have. We have price come into this zone and start rejecting it as support. So it came deep into the zone. So yeah, I mean, the first deep test into the zone was not up here, but it was right here with that little wick right there. So this right here would have been the area that I likely would have entered. You may have entered up here. I don't want to personally be entering that high up into a zone, because then your stop has to go like down there. I prefer to get an entry at the zone. So right here would have been an entry where I could have gone with, because we've had like when you zoom out, we've had a deep test in the zone, a little bit of a bullish wick right there. So in that case, that would be fine for me, and take profit would just go right about there. So in this case, it stopped out. It barely pinned the wick, and then it started to push up with a bullish price action. So in this case, what I do is right here, we've got that pin in there and the pin down there. So what I would do is I would just extend the zone a little bit further down. And in this case, that little bullish wick wouldn't have given me enough evidence to say it's going to be a complete turnaround. This looks like it might have been a new spike or something. But what I will do now is if we do come back in here for a test of the support, I'll look to buy. And then it never came back. So this is one of those very depressing trades where you enter, it literally just takes out your stop, and then it goes to the target. So you ended up being right about the move. The only way you can avoid this is by having just a really wide stop loss and then using active trade management. It's the only way you can avoid those things, and even then you'll still get stopped out at times. So this is what I'm going to do. We're still sitting here around the starting balance. We're at $500. We're at $500. I'm going to go ahead and just call this a failed challenge. So I'm going to say that, we've traded. Again, keep in mind, this does not simulate completely real data, because this is from essentially, we'll say the beginning of July to now September. Yeah, beginning of July, beginning of September. So that's July, August, September. So that's essentially about a little over 2 months worth of trading data. All of July, all of August, and we wind up at the beginning of September. 2 months of trading data in the account is essentially sitting around the same balance. I'm going to go ahead and just scratch this one and call this one just a failed challenge. You'd obviously keep trading through it or whatever, and you have multiple opportunities on multiple other pairs, so it's fine. It kind of spreads out your risk. It kind of spreads out your winning and losing streaks. So it is what it is. But yeah, in this case, we'll just scratch this and say we failed. So we did every single thing normally. We did every single thing right. We maybe only made a couple mistakes here and there. Things like little stupid stuff like that, or like a little pin past the zone takes us out. Things like this right here, where a little pin past the zone barely takes us out, and then we ran like pretty much to the profit target. Things like that, where the pin takes us out and it goes up. It's just a part of trading, and you just got to accept it. So yeah, in this case, we'll just say, we failed. We didn't really compound the account. Didn't really lose any money. We lost 16 bucks minus the commissions. The commissions might have been maybe another, depending on your lot sizes, probably no more than 100 bucks. So you maybe lost, you start at 500, you end up with maybe like 400 in the account. So you sort of broke even after all those months. Cool part is that you weren't losing money. Maybe you had other accounts that you were trading. If you're trading with like 2, 3, 4 accounts at the same time, during the same time frame, you might have had another account that you started at 500 that you get to 5,000, and then you have a second account that you got for maybe 500 and it ended up at 300, and then maybe this was just one of the accounts that you had that was at 500 and now it's at like 400. So you'll have some winners, you'll have losers, you'll have break evens, and you just trade through it all. So that's it for this backtesting video, and I'll see you in the next one. Alright, so we're going to jump right into it. We're going to be picking a random pair, and we'll be continuing with another backtest. So number between 1 and 20. Looks like it's 13, so go here to the pairs. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Right? That was 13, yeah. So it's CAD CHF is the pair that